Hello and welcome to Charting the Markets with me, Sean Murison, Senior Market Analyst at IG South Africa. In today's economic calendar, we do have that weekly unemployment claims out of the US. And then this evening, we have the Fed Chair Jerome Powell speaking. Markets will focus their attention on that, obviously in lieu of monetary policy. It does, however, seem to be a bit of a foregone conclusion. If you look at the CME FedWatch tool, suggests there's a 90% probability of no further rate hikes this year out of the US. But we'll still look at that meeting for clues. But looking at some charts, let's start off with where it all begins, which is the US dollar basket, the US dollar index. Now, that longer-term trend, I don't have the 200-day moving average on this chart, but the price is still well above that 200-day simple moving average. So that does suggest keeping a long bias to trades on the dollar still. Although over the short to medium term, we have had a bit of a consolidation, a bit of a range-bound environment. So my preference is to look for longs or breakouts in line with that longer-term uptrend in the short term and not look at short positions. But we did have a break of support here, that 105 level, after that reversal that we did talk about in our last meetup. So we had the reversal, we had the break of support. We actually broke the 105 level as well. And the price is trying to rebound off of that level. Now, I will say that despite having a long bias to trades on that, I do think that this rebound looks a little bit weak and want to see a little bit more momentum to that move up before getting too excited about that. And certainly if we do start moving below that 105 level, I'll say, well, there's a bit of this short-term rebound is failing. But I still wouldn't be looking at shorts. I'd be looking at where we get the reversal, even at that 104.10 mark. From current levels, it's a bit of a difficult place to find a position, but some momentum would be maybe a move above that 105.70 mark to unlock some gains towards that 106.80. So we've had a bit of a rebound. Looks like a bullish reversal. The longer term trend is up, but there's not really much momentum to that move just yet. That rebound is supported by an oversold signal, but we want to see just a stronger move up before committing, I think. Or if it does fail and we start trading a little bit lower, waiting for that bullish reversal at one of our lower levels of support. And I think we'll look all the way down, even to that 103.40 level. Start to trade below there, then start to think, well, maybe that longer term trend is starting to change direction. But that's not the case right now. That long term trend is up. Short to medium term consolidation for the US dollar. Now, looking at the euro dollar, this is trying to reverse its trend, although there is quite a strong weighting of the euro in that US dollar basket. If we just add a simple moving average to our chart, I like to use the 200 on that chart. You can see that longer term trend is still considered up, but we do have some upward momentum. So a contrarian move at this point in time. And there's a suggestion that, well, maybe we are getting rid of reversal because we've had a push up. We've had a bit of a pullback from that move up, and we have these long wicked lower candles, which show some price rejection at this point in time. For me, still happy to sit out strength in the euro if it does manage to play out, and still looking for a reversal for short entry. I think maybe close to that 1.0790 mark. Or if we do start to drift a little bit lower and see the price settle back below that 106.90 mark, then I'd also consider short entry, targeting a move initially to 1.0630. And you really want to see it move below that before unlocking sort of some significant move to the downside. So in the event that we start rallying up, happy to sit on my hands, wait for that strength to play out in the euro, but waiting for that bearish reversal for short entry. Alternatively, seeing a strong close below this 1.069, I might consider a short entry as well. Be quite discretionary as where to put a stop if you were looking at a short on that position. I think maybe above a 1 or 2 day high might be a consideration for that. Looking at cable, pound versus the US dollar, similar picture to what we saw there, is that longer term trend is still up, but we do have some short-term momentum to the upside. We've had a strong move up, and now we had a bit of a pullback. That end of that move up was marked by what we call a shooting star. This long wicked candle was a long upper wick, suggesting the price rallied up there, got rejected. That's where the selling came in into the cable, pushing the price lower. We do have a lower close here below that 1.23 mark. And I suppose if you are, although there is some indecision to follow, I think we'd lead with that dollar chart to see, where these other charts are going first. But we do have a move below, a close below, and I think you could probably add a level there, probably 1.218 as a support target from that move. And I think having a stop loss maybe above, maybe just a little bit, giving a bit of daylight above that 1.2300 mark might be a consideration for that. But we're still below that 200-day simple moving average. Despite the short-term move higher, we have seen that is showing some signs of ending that rebound from oversold territory. And we are starting to move back down at this point in time from overbought territory. Moving on to some indices now, and starting off with the US Tech 100 or the NASDAQ 100. This has worked out relatively well. Trade of the week, we talked about this bullish signal here, and we looked at a long position targeting a move, probably a little bit too conservative, up to about that 14,500. That move has shown some further momentum. We've broken through that 14,900, and now we are testing this 15,250 level. We're actually trading slightly above there, but the breakout I'd only consider if we do close above there. Now, you can argue that the price has traded below that 200-day simple moving average and has had a little brief blip below that. I'm still assuming that longer-term trend to be up, maybe cautiously up. Short to medium-term trends sideways. Still preferring to keep a long bias to trades on the NASDAQ right now, but we are overbought, and maybe we could see a bit of a pullback. So tricky to chase it right now. Ideally, you'd like to see a bit of a pullback from overbought territory, see the price settling at one of our support levels, maybe 14,900, maybe even 14,565. But we'll see how the price gets to whichever levels it gets to. And of course, it doesn't need to do anything that we ask it to, expect it to do. The preference is to look for a pullback from overbought territory for long entry in line with what I still think is a longer term uptrend. If we have a breakout here, we do have upside targets here, 15,630 and possibly even at 16,000 level. That type of move higher is a bit trickier because you are overbought at this point in time. And you are trading a market at its high. So where to put your stop loss again becomes a tricky situation. It is a tricky stage, a market environment here, but still for me, still looking at keeping a long bias to trades on tech. And just my preference would be to see a pullback from overbought territory for long entry rather than chasing the breakout if we do get that breakout. Now, when we look at the S&P 500 chart, is similar but not quite the same. Obviously, there is a weighting of a lot of the constituents from the NASDAQ in the S&P 500. But we've had a bit more of a meaningful move below that 200-day simple moving average. And my suggestion here is that the longer-term trend is sideways. So obviously, whereas the NASDAQ does no financial exposure, it's mainly tech, not only tech, but mainly tech. S&P, obviously, it does. At this point in time, we do have some upward momentum. We're actually at a level right now, probably that 4,400 could be considered a level. So I haven't drawn it in on this chart yet. I'd like to see how we handle that level. A breakout, call for a move to about 4,460. If it does reverse, because we're in a range-bound environment and I don't deem that longer-term trend here, I think that might be a shortable opportunity. If this move higher does fail and we get a bit of a bearish move, possibly into this evening's commentary from Fed Chair Jerome Powell. In that situation, we have a lower close, a bit of a negative, a sort of a decent-sized red-bodied candle, would consider a short position, having a stop above that reversal high, targeting initially that 4,325 mark. And if we get through that, maybe even 4,270 odd. Alternatively, you're not comfortable shorting. If we do get that reversal, we wait for that price to pull back and see which level it settles at, and then look for long entry. Breakout scenario here, close above 4,400. Again, becomes tricky if you're trading that initial breakout as to where to put your stop. Maybe on a close below a 1 or a 2-day low. Looking at the Germany 40. Now, another range-bound price environment. The price has been zigzagging through that 200-day simple moving average. At the moment, the short-term momentum is up. So we've had a rebound from oversold territory. We've taken out some levels here, and the next level on the upside is that 15,485 mark. I think if you are already long, I consider trailing a stop loss on a close below a 1-day low. If you're not already long, I want to see that little close above. I'd say probably this high here at about 15,290 before targeting 15,485. But again, then where would you put your stop? Well, that is obviously dependent on your threshold for risk. Possibly below the intraday low today might be a consideration. But we'll see how we handle that 15,485 level. If we do get close to that, If we do have a bearish reversal, that would be comfortable shorting that, and the breakout would be relatively comfortable taking a long on that as well. FTSE 100, range-bound environment, been working out quite well up until probably last week, the last week's move. We see a break over that 7,410 mark, and it's been conforming quite nicely in the past to these levels. This time we had an upside breakout, and then we had a sharp move out. So that initial breakout, you could suggest has failed. But we had a strong move up, and we've had a bit of a pullback now, and I think a bit of a tricky phase again where we are right now. I think we could consider another breakout if we do get a close above that 7,400 mark, 410, in which we have a stop loss and a close below the 7,360. And my initial target would be that recent high, that's 7,484. Now, if we get above that, that's when we start looking at these higher levels, the ultimate level there being about 7,700. But we could probably have a conservative target in between there, maybe 7,625 odd initially, but we'll see how we handle this level. If we can break above it, then I think that could suggest that, now we are continuing on the upside, having a stop loss and a close below that reversal low. So the low of today's candle would be that if we get the breakout. Moving over to some commodities now and looking at Brent crude. Now, we have been saying that longer term trend was up, but that really situation has changed. Price is now trading below that 200-day simple moving average. And interestingly enough, crude is trading well below the levels it was when the conflict in the Middle East started, or the war between Palestine and Israel. Now, obviously, that does still pose numerous risks to the oil market, especially in the event of any type of escalation and cross-border, that war crossing borders into other Middle Eastern territories and restricting supply. So it really is one to watch on oil. Very volatile at this point in time. Strong movements to the downside. I think there's been quite a strong move to the downside and be reluctant to chase it further down. Looking for a bullish reversal off one of the support levels. The next one being at $78.50 per barrel on that. But it hasn't settled. And a reversal, I would consider, like if we look at this big red candle from current levels, just this green candle showing a little bit more legs and managing to close above the halfway mark of that preceding candle. But certainly there's a short-term momentum to the downside on Brent crude, and that longer-term trend is sideways. We are looking at trading between the levels. Support is quite in close proximity, so I think it's a bit tricky trying to chase it further low. It might be the right decision, but we are oversold at this point in time, and we have had a significant decline. So my preference here, I'd be looking for bullish reversal at one of those support levels. And I've got one at 78.50, but you probably have another one down sitting there about 77 odd dollars per barrel. Gold, now obviously another commodity that reacted very, very sharply to news of the war on some safe haven demand. And at that time, we also started seeing some weakening of the dollar. And so we've said that this long-term trading environment for spot gold is a range-bound trading environment. So we're looking at trading between levels or breakouts and reversals of levels. We've had a very strong move higher. We had a pullback. That pullback failed to, that it did end, gave a bit of a bullish sign there, but never really materialized. Reached a high there of about $2,005 per ounce. We were looking for initially that $2,010 an ounce, and is subsequently now starting to correct. So we did close below that 1970 level, which we talked about, and we have now traded promptly to our next support target there, which was 1,950. Price is still falling, and I think if you're looking for a long entry, you'd probably want to see a price reversal off either this 1,950 level or this 193 level. If you do have a downside break of that 193, there's quite a lot of, not too much in the way of support until about that 1,890. So gold at the moment has corrected quite sharply from overbought territory. It is trading to our levels. It is still correcting. And you want to watch that dollar, inverse correlation with the dollar. At the moment, we're seeing some strength returning to the dollar, and that is correlating with some of the weakness we are seeing in the price of gold. I suppose if you do see that dollar start to weaken again, we'll probably start to see some signs of a rebound here on gold, and we'd get the reversal technically, which we'd be looking for. Platinum. Another commodity, another market sitting in a range-bound trading environment, which seems to be quite a prominent trend in a sideways trend around lots of different indices, lots of different shares at this point in time. It does feel like we're in a range-bound trading environment across a lot of bourses and commodities at this point in time. So we're trading between levels rather than trend following at this point in time, although we still keep a bias to what we deem as a longer-term trend. If that trend's sideways, then looking at longs and shorts in the market. Now, platinum is no different at this point in time. Range-bound environment, it's trading below that 875 level. It is still falling. But a level, historical level there at about $840 per ounce, but there is probably a level just above that, about 860 odd, conservatively. The move low has been quite sharp. Also looking for a bullish reversal closer to level of support. We are below 875. If today was a reverse, I'd like to see the price back above that level before looking for long entry and targeting 8940, and then looking at a close below that reversal low as a stop loss indication. While we are still falling, we're looking at our next levels of support, so maybe somewhere between 860 and 840. See a bullish reversal there might be a bullish indication as well for long entry, but we are still falling, and we need to see the price just ticking back up from its initial decline, which it hasn't given us an indication of yet. We are in oversold territory, and if you're looking for additional confirmation, maybe looking at something like that stochastic, just ticking back out of oversold territory, just to add some credence to the idea that price is now reversing course. But that's all the charts from me. Shaun Murison, a senior market analyst at IG South Africa, and thank you very much for watching.